Hello everyone. Recently we have all witnessed increased volatility in the financial markets, largely influenced by geopolitical tensions. In the past, a widely accepted approach was simple: invest in quality assets and hold them for the long term. Short-term fluctuations were considered normal and not a cause for concern. However, today's environment feels different. Many investors are asking, should I rebalance my portfolio? Should I make adjustments now? If I act, I may lock in gains, but what if the market continues to fall? What is the right decision? At the core of this discussion are two strategies: buy and hold and portfolio rebalancing. There is no universally correct answer. The choice ultimately depends on your priorities, whether you are aiming for maximum growth or more stable risk control. Simply put, buy and hold determines how much you can earn, while rebalancing determines whether you can keep it. Think of it like driving. Are you aiming for speed or stability? Let's start with buy and hold. The idea is straightforward. Invest and stay invested. Allow strong performing assets to continue growing without interruption. In long-term bull markets, this strategy is both effective and efficient. It minimizes trading, reduces costs, and allows compounding to work at its full potential. But it comes with a hidden risk. Over time, your portfolio may become overly concentrated. For example, an industrial 50-50 allocation between stocks and bonds can gradually shift towards stocks if equities perform well. While this may look impressive, it also increases your exposure to a potential downturn. When markets correct, losses can be significant. On the other hand, rebalancing takes a more disciplined approach. It involves periodically selling assets that have performed well and relocating those that have underperformed. This helps maintain a consistent level of risk. In volatile or declining markets, rebalancing can act as a safeguard, helping to limit losses. However, during strong bull markets, it may feel counterproductive as you are trimming your best performing assets. Over time, this can result in a slightly lower return compared to pure buy and hold strategies. Additionally, rebalancing introduces transaction costs and potential tax implications. So, how do we decide which approach is right? Let's briefly consider 4 common situations. First, young investors early in their career. They typically have limited capital but a long time horizon. Time allows them to recover from market downturns and benefit from compounding. For this group, growth should be the priority, making buy and hold a suitable strategy. Second, those approaching or already in retirement. Here the focus shifts. Capital is larger, but time is limited. The priority is no longer maximizing returns, but preserving wealth and ensuring stable income. In this case, regular rebalancing helps lock in gains and reduce financial risk exposure. Third, funds needed in the near term. If the money is intended for a specific purpose within a few years, such as education or a home purchase, risk should be minimized. Market uncertainty cannot be ignored when timing is fixed. In these cases, rebalancing into safer assets as gains are achieved in the more prudent choice. Finally, long-term family or generational wealth. When investments are meant for future generations, the time horizon can span decades. Over such periods, short-term market fluctuations become less relevant. A buy and hold approach with occasional adjustments is often the most effective way to capture long-term growth. For many people, however, the best solution lies in between. Rather than choosing one strategy exclusively, a balanced approach can be adopted. For example, maintaining a target allocation such as 60% equities and 40% fixed income with a small tolerance range allows for periodic adjustments without excessive trading. This approach offers both growth potential and risk control. In closing, financial planning is not about outperforming others. It's about aligning your strategies with your own life goals. If you have time on your side, focus on growth. If your time horizon is short, prioritize stability. As your need for funds approaches, emphasize risk control through rebalancing. And when your goals are far in the future, allow compounding to work through a disciplined, long-term approach. Thank you for your time and attention. I hope this has provided clarity and practical guidance. If you found this video useful, please feel free to like and subscribe. I'll see you in the next one. Bye!